Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. Let's take a look again on euro currency. So this week, technical analysis looks a bit boring, as the market mostly stands in a very tight range, and just a few comments we could make on the current situation. So fundamental background currently look significantly more interesting. In particular, speaking on the recent week, dollar has got significant support. First of all, this consumer spending in general was significant and provides some support to the United States dollar. As we expected, Jerome Powell told nothing new to the Congress, and this is understandable because just over a week ahead this should be the Fed meeting, and it's not probably necessary to tell something really just a week ahead. So, additionally, the overall inflationary pressure is growing in the United States, and for example, the recent Michigan sentiment in the poll, what is the most significant risk currently you see for consumers, this is, most of the respondents have said that would be inflation. Fed Consulting also warns on a higher inflation that should happen. And currently the major question here is what Fed and other central banks will do. Here we have two ways that they could act. First, they could apply more strict measures to control the inflation faster and stronger interest rates change. Or they will set higher standing target. Not 2.5%, for instance, by the Fed. It might be 3.5, maybe even 4%. Because this tempo of inflation in general supportive to economy that stands in a long-term stagnation situation. And not only for the United States, but for global economy as well. So it could help the Japan, for example, it could help the European Central Bank and European Union. So what the way central banks will choose, we will see. But at the first stage, when the market will just come to this decision, and inflation probably will accelerate more, and we could see more significant inflation. That it means that in a first stage of the inflationary spiral, we will see stronger United States dollar until central banks will make the decision either to aggressively hike interest rates or apply higher standing target and use smoother policy. So this will be only on the second stage. In general, currently, as a result of recent statistics released and common Fed statement, common Fed meeting, sentiment stands not in favor of the euro. If you will take a look at the recent Commitment of Traders report, you will see big drop of the open interest, approximately 18,000 contracts, and big jump in the speculative short positions. Also, hedgers have closed big amount of the positions against the euro appreciation. So it means that market preparing for dollar continuation. That actually agrees with the technical situation. And in general, we could say that our view is also bearish. We suggest that market should reach the target that we have, 1620. That potentially a very interesting level for taking the long position, as we discussed in the report. On the weekly time frame chart. So in the shorter term, our standing charts, it's just almost nothing to say. Actually, you could see that the grabber that we have found on Friday hasn't worked properly yet, and this recent statement in general position of the market, you could see that we've got two different grabbers in opposite direction. First one was in the same direction, here in an opposite direction. So this consolidation brings no clarity to the further direction that market could choose. But in general, after the sell-off that we've got and inability of the market to proceed higher, well, it more looks bearish rather than bullish. Besides, on the daily chart, you can see here might be some kind of that bearish dynamic pressure because market wasn't able to break the tendency. It's still forming lower lows and lower highs. Although the shape of the triangle or wedge has changed a bit, maybe you could even draw it as the flag pattern or something of that sort, the tendency stands. So no absolute reversal swing have been formed. Despite of Jerome Powell's statements, despite on other factors, and still any pullback was smaller than the previous swing down. And here as you can see, although trend stands bullish, but price action is forming lower lows and lower highs, so that might be the indication of the bearish dynamic pressure. On the hourly chart, this consolidation takes some shape of the diamond or something of that sort, with a reverse swing inside of it, which is also not quite bullish. Well, it's difficult to say something based on this pattern, so one thing that I could say is just, you could see that here you could recognize some harmony in the price action. This retracement, here is jump that corresponds to this one, and it means that we should get something of that sort, some drop back to this area around 18 even, and then maybe it might be a reversal, the market will be able to do this. The only thing that we could say is that if these lows will hold on the market, EUR keep chance on some upward bounce. If market will take it out, then we're going to the downside, taking out of these lows, and we should be ready for downside acceleration. So in this case, market probably will break it down, and we'll start moving to our major 1620 target that we have. In the current situation, it's very difficult to find the reason to buy EUR, even based on the patterns that we have. With the sentiment that we have currently, with the overall performance that we see here, personally, I'm not absolutely inspiring for taking a long position here right now. So that is actually what we have currently on euro currency.